All companies, if they sell on credit, at one time or another, have customers who do not pay their accounts according to the terms of the sale. There are a variety of reasons why companies do not pay their accounts according to whatever the sales terms are, but whether companies are small, medium, or large in terms of volume of sales or employees, they will all have some system to handle past due accounts receivable. Delinquent accounts can generally be separated into two categories: those that are unable to pay and those who are unwilling to pay. This boils down to ability and intent. In most instances, depending on the sophistication of the company's collection procedures, the people who are responsible for accounts receivable may or may not make this distinction. The result is that all accounts which are past due are treated identically. It must be remembered that a company's first concern is to retain that customer as a future buyer. Therefore, with some companies, they do permit their customers to pay beyond the terms of the sale with no penalty. This becomes a rule rather than the exception, and this establishes an unofficial term of sale. When a small account becomes a very large account and the company insists upon payment according to the terms of sale, some problems may result. The point is, some past due accounts are self-inflicted wounds. Then, two, the credit manager or whoever is designated the responsibility of handling accounts receivable has a number of other duties. Time spent contacting customers whose accounts are past due may consume only a small percentage of that person's time. But generally, all companies have some kind of system to track their past due accounts. They all have some kind of policy that dictates what action should be taken at what point after the customer has failed to pay according to the terms of the sale. While this procedure will vary from company to company, these procedures all have some distinct similarities. Normally, when an account goes beyond 40 days or some other designated date made by the company, another invoice may be sent, stamped in red, past due. If this does not bring results, a letter is sent to the customer. If there is still no response, this may be followed by several other letters. In most instances, they are form letters. Usually, it requires too much time and effort to write a personally dictated letter. If the letters fail to bring any response, normally the next step is to phone the debtor. And I call them debtor because now the customer has become a debtor. This is a good point to remember. Customers are those businesses which are paying according to the terms of the sale. Debtors are those businesses which are not paying according to the terms of the sale. This is a good distinction to remember when prospects are referring to their debtors as customers. Remind them what customers are. Customers pay on time. Debtors do not pay on time. Depending upon the seriousness of the delinquency, the account may be assigned to someone in the collection department who will phone the debtor about the accounts. This person may be a very skilled collector, but in most instances, the person is not. If the account is seriously past due, then the top-ranking person responsible for accounts receivable may phone the debtor. In a small company, the president or owner may contact the debtor. The point is that at this point, those persons calling the debtor may or may not be trained professional commercial collectors. In most instances, their first concern is rehabilitating the account so that they can sell the debtor as a customer again. They may not fully explore the circumstances and may not be able to distinguish between those debtors who are unable to pay and those who are unwilling to pay. In most cases, both are treated the exact same way. In fact, if the debtor is working with the company to meet his commitments to pay the account, the company may even sell to this debtor again. In other instances, if the debtor fails to pay, the salesperson who sold the debtor in the first place may be sent to visit the debtor's place of business to determine why the debtor has not paid the account. Here again, the client's salesperson is not a professional collector. He is mainly concerned with making sales. Furthermore, while the salesperson is trying to collect the debt, he's not doing what he's being paid to do: sell more products for his company. Sometimes, if the debtor fails to pay, the amount of the unpaid balance is charged against a salesperson's commissions. This is not only demotivating to the salesperson, but it hits that individual where it hurts the most, in the wallet. This is not good for morale, and it is not the basis for building an aggressive, hard-hitting sales force. This is another point which can be made when talking with prospects who claim that they do make on-site visits to the debtor's place of business in order to collect the accounts. Many of them will say, "We did visit them. We sent our sales guy out there to talk to them." Then, if the debtor fails to pay at that point, the company may take one of several actions, which include credit hold, check up front, COD, or ship nothing. Now, credit hold indicates an account has been paid beyond the terms of sale more than once, which is an indication of financial problems. In this situation, each time an order is received, the customer's file is reviewed and a determination is made whether to sell more products or not. Check up front means the account is important to the company or not viewed as a major risk. Thus, the company is asked for a check up front that will be held for deposit according to the terms of the sale. For example, net 30. They may take a post-dated check dated 30 days from the date of the sale. This makes it clear to the customer that the company will not tolerate payments that are late, but still distrust him enough not to just ship COD. This works well with small companies that are just plain disorganized. And it is a way of turning them back to good paying habits. Now, COD, cash on delivery, sometimes this is also known as CIA, cash in advance. In some instances, customers pay for products as they are shipped. In other instances, they must pay for the products before they are shipped, which is cash in advance. It is a form of purchase that most companies would rather do without. Shipping COD or CIA, the customer does not get a discount and must pay more for the products than normal. Although the debtors have placed themselves into this position, the problem is that CIA or COD accounts do not stay with any one supplier for a great length of time. They're always hunting for someone to give them credit terms. Now, ship nothing, this is self-explanatory. This is a term used to indicate that under no circumstances will further products be shipped to this debtor. It is used for accounts that are about to go bankrupt or have refused to pay, or accounts that are being handled by a third party, such as us, another collection agency, or an attorney. To keep track of their delinquent accounts, most companies maintain an aging report. This list categorizes past due accounts by length of time the balance on the accounts has been outstanding. For example, 30, 60, 90, 120 days, etc., since the date of the last invoice. This may be a highly sophisticated printout, or it may be a very informal list. However it is maintained, its purpose is to trace past due accounts. That is why it is so important for you as a salesperson to understand the purpose of the aging report. If you look in our chapter 3 in our training material, making the sales call, you'll get some tips on how to use the aging report effectively, both as a means of qualifying prospects and as a trial close. As the account ages, the debtor is continually contacted by the company. The debtor may ignore an attorney or an agency-generated 10-day demand for payment, fail to sign for certified mail, break promises to pay, or begin to ignore phone calls. Mail may be returned, and even the phone might be disconnected. Or the debtor could file a petition in bankruptcy. Making attempts to contact the debtor, the company may find that the debtor is very elusive, may have hidden the merchandise purchased so it cannot be recovered, or has just skipped out and is unable to be located. He may have done something illegal and is an object of a search by law enforcement authorities, or he may just be going out of business. There may be a variety of reasons and circumstances which prevent the debtor from paying the account. If the collectors of the prospect or client company are sophisticated enough, they may know how to deal with all of these situations. However, in many instances, they do not. The account continues to age, and it becomes more difficult to collect. So, at some point, depending on the company's policy, normally around 90 days past due, the account may be turned over to an attorney or to a collection agency. If it is turned over to an attorney, the attorney will attempt to obtain judgment. However, in most instances, the judgment is of no value since the attorney may not be able to find any assets on which to execute that judgment. Now the company has lost a customer and is also spending considerable funds in trying to collect the account. At this point, it becomes less expensive for the account to be turned over to a collection agency. When these situations occur, there are advantages for a company to employ a professional collection agency such as Lyons and Associates. These advantages include collection agencies are specialists. Therefore, their only interest, which is our only interest, is to recover payment in an expeditious, amicable manner. As professionals, our collectors rely on know-how and experience to determine which procedures will get the best results. Many debtors will pay collection agencies in order to preserve their credit reputation. Also, a third-party voice has a greater impact than hearing the same accounts receivable or collector's voice from the client's company. Collection agencies are less hampered as independent parties. They are less hampered by delicate buy and sell relationships, and they affect collections with a minimum damage to goodwill. Collection agencies, as standard procedure, will submit status reports or offer online access for accounts placed with them. Now, should negotiations reach an impasse, forwarding to lower-cost attorneys specializing in creditors' rights are available as a last resort to our clients to initiate litigation. Company staff is free to spend time and effort extending credit instead of collecting on seriously delinquent receivables. In addition, problem accounts are negative and they are stressful. This relieves the company staff of this responsibility and creates a more positive atmosphere. These facts can be used when making your sales calls to prospects as well as clients. As a salesperson selling Lyons and Associates service, it is important for you to have a familiarity with the collection process going on with the companies that you are contacting. While you do not need to be an expert in collections, it is important for you to know the procedures that are followed by your clients and prospects. When you understand credit and collections, then you can truly become a consultant to your prospects and clients. And you can educate them in the reasons why it is to their advantage to place accounts with you for collection. You can convince them that Lyons and Associates can be a profit center rather than an expense. They can look at it as an investment in their future prosperity. I'm going to open up the floor for questions, comments, concerns, anything, and let's hear what you have to say. Edward Elkins.
Okay. So could you give us an example of when you're approaching somebody or explaining that it's a profit? What would be some word text that you might use?
Well, the fact that their accounts receivable department is no longer spending their time spinning their wheels, doing the same thing over and over, it makes their production time more valuable to the company. That's one point. When you have somebody that's continuously beating a dead horse, they are wasting their time and the company's time on beating these dead horses. This can also collect their money faster, which gives them access to that money as capital rather than a loss on their aging report. Did that answer your question? Is there anything I left out?
Yeah, I'm just gonna have to work at trying to use that approach. I think this is going to be a good session because I think it may help me increase my sales. Maybe I'm on the point where I'm getting engaging and I'm finding out they have the delinquents, and then I'm finding out they have an interest in getting them, but they all it's always, well, give me information, call me next week. And so I'm still calling people, and it's been over a month and a half, and they're the same person telling me, okay, keep calling.
Okay. When you talked to them the first time before you sent them information, did you qualify?
Yes. And that's where I get, it's like I'm saying, I'm engaging them, and I'm getting them all, I'm getting all this information from them and stuff, but I'm just wondering what's making them put me last on their agenda. I mean, they seem sold already, but they're putting me last. They're putting me off. They're putting everything else before the delinquents, and I think the value of it is what I'm not explaining.
Okay. Did you get a commitment from them to have the accounts ready when you call them back?
Other than just putting in my flyer, here or in my emails, I usually put in the brochure, okay, information on how to upload them as soon as they're ready or whatever, But I don't.
Hold on a second. Don't just put that in the email. You want to have that in conversation. That the commitment from them has to be spoken, and you have to get them to acknowledge that commitment. That way, when you call them back, you can hold them to their commitment.
Yeah, I think that would be a little bit, because I think I'm saying when you place them, do this or that. I'll explain how to place them. What you do is you just upload them with the invoices or to an email or fax them to me. Stuff like that. Instead of having, okay, well, you have that information ready next time. I've never gone to that point. I think that may be a help. Yeah.
That's extremely important, because if you get their commitment and you hold them to that commitment and you call them back and they don't have the accounts ready to place with you, that's also going to tell you if they're real or if they're just pushing you off to the side.
Okay.
Because one of the top reasons businesses fail with internal collection initiatives is that they wait too long to outsource problems.
Mm-hmm.
And second to that is when they don't know what to do, they do nothing. And the thing is, you're telling them what to do, but their primary objective is to approve credit for new sales. So collections for seriously delinquent accounts are on the back burner. That prospect may also see that debtor is, oh, they're never going to pay. Placing them with an agency is not going to do anything. But if you get their commitment and you hold them to it, you have a much better chance of getting them to place the account. Anything effectively done in life has to have steps taken. Anything. So that's something to keep in mind for yourself and when you're getting a potential client's commitment to place business. You know, can you start your car if you don't put the key in the ignition? No. Well, not unless you have keyless go, you know, where your key's in your pocket, you get in and you push the start button. That's a different scenario, but maybe that was a bad example. Are there any other questions from you on that point, Ed?
No, that's it.
Okay.
I think that helps me. I can use that today when I start making calls and practice. I got some callbacks this week that they like the one guy. He was he told me he had 150,000 in delinquents, and they were having a problem with both departments being new to accounts receivables because they had a new business manager, and she wasn't sure what to do with the delinquents, and the freight manager was going to have to handle it because he'd been there a while, but he didn't know. He would have placed them that day, but he didn't know exactly what paperwork because he's never dealt with the delinquents before. He just knew that there were several aging accounts. There was 150,000 in aging accounts. Two of them were about $40,000. At least two, he said, were around $40,000. But he wasn't sure the exact aging on all of them.
And that goes right back to when they don't know what to do, they do nothing. That's a prime example of that. What you should do is get his commitment and consult him on what paperwork he needs, which is a statement of account, the invoices, and the bills of lading for the various shipments that are on the statement for which the debtor owes the money on. And if you walk him through it, be helpful. If you go in there and you become helpful to him and walk him through it, kind of hold his hand and take him for a little walk, you know, you'll be much more likely to get those accounts placed with you. And you may also want to get maybe Rick to go in there and conference with you. And if you guys have any problems closing that, I'll go in there with you and make it happen. Because
Okay.
we need to find out, use me as a last resort though.
All right.
Because I can tell you this, I am very aggressive and I'm going to make your prospect very uncomfortable on the phone. And we're either going to get the business or not get the business. No in-betweens.
Okay.
But yeah, try that stuff out and See how it works for you. And if you start adding these things into your sales cycle, you will begin to find that you're getting a higher ratio of closes and you're writing more new clients and seeing more new accounts coming in.
Yeah, I've still got that guy. It's been a month and a half at least since I've been talking to this guy, Ronnie Machos. You talked to him, and he said, "Oh, I'm really busy. I'm really busy, you know." But every time I call twice a week, and he's busy.
He's putting you off. He's too busy to collect his money. He wants to go out of business. So we need to get in there and get Rick to make a conference call with you on that. And if that doesn't bring anything to the table, get me to do it.
Okay. And Rick made a conference call with me on one. And this is the second week I was working. There was a lady that told me she had hundreds of accounts, you know. And then they went ahead and emailed me back because she was going to go to her manager. Or no, she was going to go to the owner. And the manager stopped it. She got in between her going to the owner, you know. And sent me an email.
Go over his head.
But then the manager's a woman, and then I found out Rick made a conference call with me. Rick called him, and it's been a couple months, you know, since then. And we talked to somebody else, and she said the same thing. The person I spoke to, that there's 3 people working in receivables, I guess, and the other person said the same thing. There's a whole bunch of accounts, but there's 25% of them are commercial. The rest of them aren't. And then she said that the owner actually didn't do any billing. He had a problem with billing, and he is selling the company to the manager who stopped me. So that's kind of was a deterrent to me. But Rick talked past it and heard the manager talking in the background. She was giving information about the aging of the accounts to the accounts receivable. So that was a good sign, and I'm just gonna. Rick said he would go ahead and call back for me since he started that conversation again, because she did suggest, the manager did email me and tell me to take her off the call list, but Rick thought he could call the owner, you know, so we called anyways, and then ended up going through this situation. So he's working that out. I sent him information again, and then we called and we got the same person I talked to, and I guess the manager scared her quite a lot. So she was like, "Oh no, I was told not to give you guys any information and stuff like that months ago when last time I called her." She remembered me and Rick, and so.
Well, Edward, don't worry about it. Let Rick handle it, and let's move on.
Okay.
Okay, that's the best thing to do on that. Frank, what you got going on, brother?
Well, sort of ties in what he was just talking about in terms of showing how we can be a profit center. One of my accounts, we was a second placement. We called and the debtor said, I paid the last agency all that money. So I obviously called back the client, and he verified with that. He's like, "Wow, Frank, you've earned my business because they never paid me." Talk about integrity with other agencies. They collected the money but didn't forward it to the customer. So he's like, "You've earned my business because if I wouldn't have engaged with you guys, they would have never paid me that money." So, and he goes, "I got some other old accounts." I go, "That's great. I want those, but he's a contractor." I was like, "Every time I call you, you tell me how busy you are. You can't do anything till evenings or weekends because you're working 15-hour days." It's like, let me do it. Anything that goes beyond your terms, your job is to be in the field, in construction. My job is to collect your money. So he's like, "Great. You're right, Frank. That does make sense." Because I told him I can go from 40% to 15% if he gives it to me after 60 days or after his 30-day terms. So he's all excited to see that, yeah, we're the collector. He's the contractor. So.
Right, exactly. Let him do what he's good at.
Right.
You know, you won't catch me up on a roof with a hammer.
Yeah, exactly. So that just shows how we can be a profit center for them. Oh, you know.
And that's awesome. Although we something like that, we have to close it as a paid prior. But
Right.
Now, and you see that agency told them, oh, we can't collect your money, and they got paid.
Right. Exactly.
And if they do not pay him his money,
Right.
place that with us for collections.
Yeah. Yeah. Exactly.
Yeah, and look, we've collected from other agencies before.
How long should he wait? Because obviously it's already been over a month. Shouldn't they be cutting a check like instantly, or how long?
It depends on what their remit policy is.
Okay.
Most agencies do not operate like we do. With when money clears our trust account, we pay our clients here.
Right. Exactly.
Okay. Most agencies don't do that. Okay, and their remit policy may be 30 days. Who knows what it is? He needs to call them and ask them, when can I expect to receive my money that
Right.
you paid? And
Exactly.
if
Well, I'll be talking to him on Monday because he said he's giving me another 2 or 3 accounts that are the old second placement ones over the weekend. So I'll bring that up to him on Monday. Plus, like I just said, I told him that after they extend beyond the terms he extended, he needs to place all that new business with us, and he agreed. So
absolutely, and on other collection agencies, a lot of them just do not do business on the up and up. And don't get me wrong, there are many good agencies out there, but there are also some bad apples, as with any business.
right. I don't know if this is the right form or not, but I was talking with Tom and telling him how I've got 2 big transportation companies coming. And he said, well, that's great, Frank, because you're new. And he goes, but remember, I only go after the shippers and consignees. Is that anything different than I've already talked with you and Rick about in terms of I thought we go after the factoring company, we go after the brokers, we go after the original shipper?
We go after everything. You
Right.
sure he didn't say he always goes after them?
Yeah, I thought he said he only goes after, because he goes, Frank, remember, I only go after the shippers and consignees. Obviously, consignees may include the broker and every other party involved.
And I think what he was trying to tell you is that he always goes
Okay.
after shippers and consignees.
And consignees, sorry.
The reason I think he's making you aware of that is in case the client has a relationship where they do business with the shipper or the consignee outside of whatever they did with the broker.
Right.
We don't want to damage that relationship.
Right.
Okay, because sometimes there will be situations in transportation paper where the client doesn't want us to go after a consignee or a shipper because they do business with them, and they don't tell them. They get all bent out of shape when a collector goes in and hammers their customer. Well, what are you doing? What are you doing?
Right. Right.
They called me all upset. Well, yeah, of course they did. They're getting hammered by a collector.
Right. So it is how I thought it was. We go after whoever owes the money, whether it be the factoring company, the broker, the direct shipper, whoever owes that money, we're going to go and communicate with.
Right. We're going to look for areas where liability can be assigned.
Mm-hmm.
If there is liability, we're knocking on that door.
Yeah. Yeah. And then I don't know, we remember that BSP one? He made one phone call to the debtor, and they said, oh, that person hasn't been here for a while, and we moved. Forward on the appropriate documentation that we owe you money, and we'll pay you. That was a second placement. Could not collect from the other agency.
The other agency probably sent them letters, and they probably had an inexperienced collector contacting them. They probably didn't get a PI contact, either a PI phone call or a PI visit. The thing is, many agencies these days are taking on the call center approach to commercial collections, which that works just fine if you're dealing with consumer accounts. But the fact is, commercial business, every account is different. You can't have one standard operating procedure and expect it to be effective across the board on all accounts. It doesn't work.
Right.
You'll get the easy money, but any money that's past easy, even if it's just a little difficult, they're not going to get it if they have somebody call and say, "Hi, this is Bob with the collection agency. You owe my client $5,496.25. Can you do a check by phone today?" Right. "Oh, no. Can you make arrangements then?" They're going to say, "Bob, go to hell."
Right, right.
And then Bob's going to call them back in another week, and now they see it on a caller ID, and oh, that's Bob from some collection agency. Send him a voicemail. Yeah. Bob's going to leave a message, and then somewhere in there, Bob's going to start getting agitated. "I left you 25 voicemails, and you haven't called me back." "Really, Bob? Really? Really, idiot?"
Right, exactly.
If it didn't work the first or second time, why do you think it's going to work the 25th time?
Right.
And that's something that happens within a majority of the agencies out there, because they're doing things to cut costs, which include not hiring real experienced collectors. They get somebody that they can get for a low price, and, well, you get what you pay for.
Yeah, exactly. So that's about all I got.
Okay. Hank, what's happening, Daddy-O?
That's good information. You know, I've had some discussions with people that, working with existing agencies, and it sounds like they have agencies that are ones like you're talking about that aren't being real effective. I mean, they're minimal communication. I mean, they're just maybe emailing them. They're not talking to a collector directly. So the more I can learn about what sets us apart and helps me talk about that with them. And then, as far as, still the main, or the most of the time people tell me they're doing all in-house, talking about learning more about how their collection process works, kind of talk, tell me how you guys do things, and kind of talk through it. And I'm thinking through that a lot more, trying to talk to them. Maybe they could be, they're not being efficient with their time. Like you talk about, they should be spending more of their time on new accounts, granting new credit. So I'm really just kind of sitting there thinking about that, trying to even if they're, we're all in house and we do, let's talk about how you're doing that and how is that working. And so that's some good ideas.
Right, and something else to think about when they're doing everything in-house is, at what point do you deem an account uncollectible? Because I promise you, an in-house department does not have somebody hammering that account for 150, 180 days. They probably hit it for 60 to 90 days and then write it off. Because it would not be cost effective for them to just keep beating a dead horse. The horse is already dead. You're not going to kill him. And, on the ones that are just adamant about only doing it in-house and not giving us a shot, chalk them up as a no need, because you don't want to continue spinning your wheels on it. However, before you chalk them up as a no need, see if you can get higher up on the executive ladder, and see if you can convince somebody, a CFO or a controller, that using us as a partner after their in-house department is done with it can be very profitable to them. All right. Do we have anything else?
So even on small accounts, Mike, are they always contacted by the collector directly?
Yes. Yeah, on any accounts placed with us, they are going to get contact. Now, if they're too small, you know, if an account's $2,000, we're not paying a private investigator $150 or $200 to go out there and visit them. Not going to happen. But a collector will call them. They'll get calls, emails, faxes, phone calls, all of that stuff on your small balance accounts. Also, some of those down to about $1,000 will get a PI call. The really small ones, they just won't get a visit. Yeah, the visits are something we've got to, our collectors have free reign to use them, but they also know that if they're going to use it, it needs to be effective. You know, it has to be cost effective and some hopes of a return on our investment.
Okay. So sometimes it's a, well, obviously the collector is working on it, but sometimes the PI, instead of doing an actual site visit, would work the phones as well on the two people.
Yes.
The different levels of the PI. I didn't realize that. I thought the PIs were just really face-to-face, making calls. I mean, making visits to the place of business. Okay, that's good to know. The different levels of that.
Yeah, absolutely. Absolutely. Anything that can put pressure on a company to get them to the table to pay us or pay our clients, that's what we do, man. We look for points of pressure and we use them. All right, well, if nobody has anything else, we're going to call it a day on here, and we'll revisit Friday at 11 a.m. Central, 12 Eastern, 9 Pacific, 10 Mountain. And Hank, when you get a chance today, give me a shout about that deal that we were talking about last week, the one that was going to come through Monday. Give me a shout about that.
Okay.
Call me.
Rick and I talked to that lady yesterday. I can tell you.
Oh, okay, okay. So is it coming to closure?
She's given them until Monday to respond. Her by Monday, she's gonna place it. So that's getting closer. That's basically it.
Taking the stall. She's still that man that drug. She must not like to go shopping.
I don't understand it at all, really. But you know, we kind of pressed her, and she wanted, that's what she wanted to do. She said, if I don't get my money by Monday, I'll give you the account.
Okay. Well, call her Monday. Then you don't need to give me a call about that one. I was going to see if there was anything I can do, but apparently you guys are all over that one.
Well, we'll see. Hopefully Monday she'll send it to us.
Good deal. Good deal. Yeah, it'll be here Monday, man. They're not going to pay him. So anyway, guys, I'll see everybody on here Friday. And have a powerful day.
All right, thanks, Mike.
All right.